Welcome to the dimly lit streets of the S&P 500 market, where narrow alleys twist into shadowy recesses and the streetlights cast long silhouettes across market trends. Let's search the streets and alleyways before us with trusty magnifying glass in hand, looking for clues. Let's jump right into it. Key, buy and sell levels or ranges. Today, November 11th to the 12th. Value area high VAH, 6,899. A smoky ceiling fan spinning slow over the bar. Value area low VAL, 6,889. Scuffed tiles where footsteps always return point of control. POC, 6894. The crowded diner booth where the whispers piled up. Day high to low 6900 to 6881. The corridor you do not want to be caught in after midnight. Support zone 6889 to 689. 3. Good cops on a bad beat. Resistance zone 6895 to 6904. The doorman who checks every alibi. Single prints. Escape path. Lower 6882 to 6887. A back alley that runs fast when it breaks. Upper 6,895 to 6,899. A fire escape to the roof, 2 steps at a time. Market context. Last 3 sessions sketched like rain on neon. November 10th, POC 6803, VAL 6800, VAH 6858. Buyers tested the marquee, but closed with their hat in hand. November 11th, POC 6845, VAL 6840, VAH 6875. A steady climb up the stairwell. November 12th, current POC 6894, VAL 6889, VAH 6899. Balance just under the round number at 6900. Red, a 3-day progression higher. Value marching up the block. Today is a balanced profile beneath a psychological door at 6,900. Acceptance above 6,899 would put new shoes on this trend, while failure back through 6,889 hints at a friskier rotation lower. Volume analysis, cumulative, volume delta, CVD, breakdown, session open CVD, 2,186, buyers had the first word. Intraday peak buying, CVD, high, 7,617. The tape leaned long. Intraday low, CVD 1,574. A moment the room went quiet. Current CVD, 6,087, which is 3,901 above the open. Bulls still holding the badge. Interpretation. Aggressive buy-side effort persisted, but the pullback to 1,574 shows sellers are not asleep. Any push through 6899 must be fueled by fresh initiative, not just the usual barflies. Risk management considerations. Long trades. Entry zone 6,890 to 6,893 near VAL retests or acceptance above 6,900. Initial stop below 6,887. Lower single prints or 6 points below entry, whichever is wider. Targets POC 6894 first, then 6899 to 6904. Runners toward 6908 to 6912 if momentum holds. Short trades. Entry zone 6898 to 6904. Rejection of the high ledge or failure back below 6889. Initial stop above 6,906 on rejection shorts or above 6,894 on VAL breakouts. Turn traps. Targets 6,894 first, then 6,889. Extension towards 6,882 single prints. If the alley clears, position sizing. Risk 1 to 2% per idea. Size by stop distance, so dollar risk is constant. After first target, trail to last defended level, not to your hopes. Potential scenarios and trade setups. Scenario A. Acceptance above the ceiling. If price accepts above 6,899, enter long on a pullback towards 6,896 to 6,899. Stop 6,887. Targets 6,904, then 6,908 to 6,912. Rationale. Initiative buying confirms the case file. Trend continuation. Scenario B. Rejection at the door. If 6,898 to 6,904 rejects with weak follow-through, enter short. Stop 6,906. Targets 6,894, then 6,889. Rationale. Responsive sellers fade the rooftop chase back to the street. Scenario C. Trap below value. If price breaks 6,889 but fails to continue and reclaims 6,891, flip long. Stop 6,886. In targets 6,894, then 6,899. Rationale. Failed breakdown. Shorts caught without an alibi. Scenario D. Clean. Break down the alley. If 6,889 fails, with pace and tape is heavy, enter short on a retest of 6,887 to 6,889. Stop 6,894. And targets 6,882, then 6,876 to 6,872 if delta bleeds. Rationale. Single prints act like loose cobblestones. Quick steps lower. Smash the like and subscribe button. Click the bell to receive content notifications. Remember, the future belongs to the focused. Stay disciplined, stay curious, and as always, trade smart, trade strong, and never stop leveling up. I'll see you in the markets.